radar is Zydus Wellness. The company is reporting an overall good set of numbers, revenues climbing 17%, margins also at around that 21% mark itself. Tarun Arora, the CEO and director of the company, joins in to discuss the numbers in detail. Tarun, the important part, what happens to your summer portfolio is what everyone on the street wants to know. On the back of that, what's your guidance for this entire year? And if you could break that up in terms of growth coming in from your foods business, your nutrition business, and how much comes in from your personal care business.
Thanks for having me, Mangalam and CNBC. We've had a good 2025 financial year, and we do believe that we are up for a continued double-digit growth journey into FY26 as well. We've seen a bit of rains in some of our markets of East and in the April, and May has also seen something in North. So May impact the party a little bit, but we still stay committed that a double-digit growth is on.
So when you say double-digit, what do you mean? Because the last time you said that 15% mid-teens is the revenue that you can actually do. You've done about 16% in the entire year. So with the offtake problems that you have in the first quarter, what does double-digit mean? Should we look at more like 10 to 12% or maybe 12 to 15%?
I don't have a specific number, but I'm clearly hopeful of early teens upwards, but it may swing a little bit here and there depending upon how eventually the whole quarter goes by and eventually what we can catch up on.
All right. Hi, Tarun. Good to have you on the show. Nigel on this side. As of now, the margins that you've reported is close to around 14% approximately. Yes. But you all have indicated that you want to head towards 17 to around 18%. Give us the glide path. How do you see it improvement on a year-on-year basis?
We believe that a fair number is 17-18%, and it'll take us probably about a couple of years to get there. One clear driver for us will be consistent focus on driving our gross margins up, which should give us a good 1 to 2 percentage points upward movement. If we stay on the path to what we are looking at, a double-digit growth journey over the next couple of years, that should also translate into operating leverage, which should also help us there. So these are two fundamental drivers. Of course, we constantly remain focused on better operational costs and delivering better margins.
Right. Early teens revenue growth, better margins over the next couple of years. I just wanted your view on how the portfolio grows, because in FY25, food and nutrition, which accounts for, I think, about 70-75% of your revenues, grew 13%. Personal care grew 33%. What's your prognosis for, both these segments for the next year?
So my view is that personal care, we have hit something fantastic. Both our brands, Nycil and Everyuth, have been on a good run. We believe that this is something more systemic to the brands. The equity of these brands work very well, so they will continue to drive us in the same zone, whether, what number will play out, but a high double digit is on the cards. Food and nutrition portfolio is also doing rather well. There may be some challenges on summers, but there are so many other brands which are on a consistent growth journey, whether we look at Nutralite, which is dairy and spreads, our new acquired business that we've got, which is Max Protein. That's also seen over last 4 to 5 years. Before the acquisition was about 25% CAGR. We have seen a much higher numbers, like almost 40-50% plus in few months that we've owned. So we believe that's also going to be on a good tailwind to build us up. Our sweetness portfolio is building rather well, including new launches of Sugar-Free Delight. Our Light portfolio is gaining. So we believe both the parts have good momentum behind it.
I was just trying to understand what the delta between the two would be, because last year the delta was 3:1. This business, personal care, grew 3 times the pace of foods. So what the delta between that should be in FY26 and beyond. And you spoke about Max Protein growing at 40-50% CAGR. In absolute terms, what was the revenue that you did in FY25, and what can we expect in FY26?
No, not a CAGR. CAGR has been more 25-30% before the acquisition. It's since acquisition we got those numbers. We believe 25-30% is what we believe this acquisition will continue to deliver on. Right now, last 5 months have been more exciting. Talking about the delta between the food and nutrition and personal care, I believe personal care will continue to drive little faster than the food and nutrition, but food and nutrition is also catching up. So I won't say a 1:3 is really on the cards. I would be happy if it is similar zone, but 1:2 is also more exciting, but no specific numbers really.
All right, Tarun, MFD, milk, food and drink, as a category that's facing challenges. What's the strategy to grow Complan?
So yes, this nutritional beverages or HFD, whichever way you want to call it, it's faced a little bit of headwinds, largely because of fatigue in the category. There are spaces which will continue to move faster. We've seen some new additions in the consumers in the digital space. There are some new brands which have come up in digital space. So we do believe that making it more relevant to the new age consumer remains one of our core tasks. We're looking at new formats to also deliver. So the way we are going to build this category or recover growth in this category, which itself is a big challenge for us, is to play the whole segments. We were largely a kids play. We've launched adult nutrition through VMAX. We'll have probably more expansion around it. We already have a toddler place with a Complan Nutri-Growth. We are also looking at few more formats and segments to play in. I think it's just keeping the brand more relevant for today's consumer who's seeking more than just the regular nutrition that they've expected from this category. And maybe the sugar story has been extraordinarily highlighted. The kids need some bit of sugar. It's actually required some bit of energy. So building newer segments and making it more relevant to the new age consumer is how we believe it'll get its growth back.
I asked you this about the last time as well. Your intra-brand synergies. You have on the one hand RiteBite, on the other have Complan, and then you have sugar-free as well. I mean, just club all of them and bring out a product, right? Everyone would want something that fortifies their milk without any sugar and a high amount of protein.
So you're bang on. I think if we really look at it, our claims, our way of working has a huge amount of synergies. It's just that the cross-brand consumer claims may not happen. So I have Max Protein, no added sugar products. I've not put sugar-free because there are a different set of consumers having a different set of associations with each of these brands. So I will keep those separate for now. There are some one or two opportunities which we'll explore, but when we are putting these brands together, the platforms we are putting together, there's a lots of synergies and we are seeing a good value out of those.
Just a final question before we let you go. Your update on distribution reach. Where are you at right now? E-com and Q-com penetration. What does that mean in your overall mix right now?
Yeah, so overall, modern trade plus e-com, digital commerce contribute to almost 23-24% of our business at a current run rate, of which 10% comes from 10.5% comes from the online space, of which 40% is quick commerce. So quick commerce is growing at a breakneck speed. It's becoming more and more relevant for the urban consumers. When I go to GT, which is the bulk of our business, like any other FMCG, that is about 3 million outlets that we reach. Our desire remains to cross a 4 million numbers, and we're moving towards it. It will be more driven by smaller population towns, rural, where we are continuing to expand and put more energies behind it. So across channels, we're seeing a good traction for our business.
All right, take that point, Tarun. Thank you so much for joining in and giving us those outlook. As a consumer, I think Nigel and I, we grew up on Glucon-D, and now as we age, we perhaps will move towards the sugar-free products that they make a lot more. Thank you once again.
Also try Max Protein. It's
Complan as well, right?
Yes, we do try Max Protein, but my grouse with that is it has a lot more calories for the protein that it provides. So maybe that conversation another time. Complan, yes, Nigel, we grew up on Complan too.
Grown up on Complan as well.
Complete plant food. All right, Tarun, thank you so much for joining in. We take a short break, come back, getting more on the markets and a lot of stock-specific action on the other side.